The really interesting thing about the market, and maybe sometimes a little bit frustrating, is that you can have so much of your strategy perfected, or you can work so hard at so much of your strategy. If there's one element, one important part of the strategy that's not well formulated or planned out or not working properly with the rest of the strategy, at some point of the market cycle, you're going to either take some serious losses or you're going to seriously underperform what you could have made. So it's really important that every part of your strategy is complete and that it works cohesively together. Now, a lot of people will really come to the market with the real concerted effort to really put their heart and energy into making this a successful business. And the problem is a lot of times people don't know what they don't know. And it just kind of takes time and a lot of mistakes to figure that out. But hopefully, with some videos like this and other education, you can kind of at least shorten that learning curve. So today, what I want to cover are the 6 elements that every strategy needs to have to be complete. If any of these 6 are missing, at some point in the market cycle, again, it's going to get painful. And that's the really interesting thing too, is that different phases of the market cycle, whether it be the bull market phase, topping, bear market, bottoming phase, or either trending versus chop markets, it'll demand different parts of your strategy having more attention. So for example, in a good bull market, it's all about that buy strategy. Do you have a well-articulated strategy, and are you really harnessing the full potential of of your method? Other times, whether it's a choppy market, it really comes down to risk management and all position sizing and all of the rest. So we'll get into all of that, but it's really important that you have all of this complete when you're approaching markets if you want to have more permanent success. So let's get started. So the very first element of every strategy, and I know the first thing people want to run to is the right buy technique, but the first thing is really the logic of the system. This is going to start to tie in everything together. If you don't get this part done, and even if you have an incredible buying methodology, you won't be able to really, number one, tie it together with the right risk management, the right selling procedures, because you won't really know what you're trying to capture. So step one is sitting back, and when you're selecting all the buy techniques that you want to use, or you're trying to figure out which stocks you want to approach and run your strategy on, you need the logic of what are you trying to capture? What is it? I mean, if you're just, and this is not about, trying to say, hey, you have to be a fundamental or a growth investor. You can just trade price. I mean, for years, I was a market maker. I just traded symbols. That was my main focus. And I was, not very concerned about the fundamentals of the individual companies. But what is the logic of the system you're running? Are you a trend follower? Are you playing reversion to the mean? You figure, things come down, it's oversold, you're looking for that bounce back. Are you looking to kind of focus on growth companies that are bringing disruptive innovation? Are you someone that believes in value investing and say, I don't want to buy overbought stocks? Overbought is one of those terms that is loosely defined, but I don't want to buy these stocks that may be very high valuations. I don't trust that, it makes me uncomfortable. What is the driving logic of your system? If you can't answer that, the problem is you won't be able to kind of tie in the right sell signals. And that's where a lot of people kind of start to fall short. They focus on the buy signals. Then when it's time to figure out when to sell, a lot of times they're left scratching their head. Or other problems that will arise is that you have a good buy signal, you have the right sell signals, your system's working well, but you see stocks taking off without you. And then you feel frustrated because you feel, oh, I'm giving up all of this potential profit. But were you? If you have a specific logic, a specific strategy you're trying to execute, you're never going to capture all of the gains. You're trying to capture the gains relevant to your strategy. So sitting down and clearly identifying what is the logic of your system. This is important. What's the logic of it? It'll, number one, help you to tie in all of your system to work together very well. And two, it'll alleviate a lot of frustration when maybe you see opportunities you missed, or you see stocks extending after you sold, or seeing stocks rebounding after you sold at a small loss, because you understand the logic of the system that you're operating within. So that's the very foundational step that ties everything in together. Number two, once you have this logic of the system down, and this somewhat starts to kind of connect with the entry technique, but really it's what's the filter, what's the screen you're going to operate on. You need to select the universe of stocks that are relevant to you. Again, this is number one going to make your life a whole lot easier to figure out what stocks to look at. I mean, time is a reality. We only have so much time to analyze stocks and formulate strategies and all the rest. So number one, it'll save you time. And the second one, again, is frustration. This can be a frustrating business if you're always looking at what could have been or what went wrong. You have to kind of get over that psychological barrier and think of this like a business person, right? So what is the filter? What are the screening parameters that you're going to focus on? If you insist that you're looking at growth companies and you want profitable growth companies because you want more sustainable long-term moves and you want more liquidity, you want stocks that are going to have less volatility, so you want to have institutions buying those stocks, that's going to bring you to a subset of stocks within the general market. And there's going to be other stocks. It could be a biotech with no earnings. It could be a takeover. There could be other stocks that can put in dramatic moves, but that's not going to be of your concern because that's not what you're focusing on. If, on the other hand, you're clearly someone just focused on momentum trades, you're focused on price, well, you're going to be looking for certain chart parameters and certain kind of maybe the float, how many shares are outstanding. You want something that's a little more explosive. You want something that's younger. And you're buying these stocks understanding that, hey, they have this incredible short-term upside if they work, but I also have a lot of incredible volatility if they don't work. So again, the filtering, the screening is going to be really critical to figure out what's the universe of stocks that will work for your strategy. It's going to save you time, save you frustration. The next important part of the strategy, what everyone usually begins with, myself included many years ago, is what is the entry technique? This is what everyone thinks is the key to success, and although it's very important, on its own, it doesn't have any value. I mean, it's absolutely, it would be saying like, I'm going to design a car and I'm just going to think about the engine. Well, you're not going to win a race if you just think about an engine. You don't think about braking and steering and suspension and all the rest that comes along with the car to actually win a race. The engine is just one part of it. So the entry technique now has to work with the logic, and you need an entry technique where you can attach a stop or an exit point to the downside. By that I mean is you have to be able to identify, where am I going to be wrong? If you can't identify that, it's going to be inevitable that you're going to have your capital stuck in a stock where you were just wrong. Things change. I don't care how amazing you are at analysis. People could have had the best kind of analysis for airlines in 2019. No one foresaw COVID coming and kind of disrupting all the industry in the world and all of that. So there's always going to be unknowns. So how do you know when you are wrong? And so you need to know what your trigger is to buy a stock, under what conditions. So we have the logic of why we're looking for stocks that we're going to buy. Then you have the screening parameters of which stocks are fall inside our purview. And then 3, when will I actually buy the stock? Now, if you're a fundamental person, what is it, valuation? I mean, is it a valuation compared to the peers, a valuation compared to current fundamentals versus forward estimates? What is the trigger? Usually people who are a little more chart-based, this is easier to kind of get to, and you're looking for a specific pattern or being above a certain moving average. Whatever it is, what is it, and when do you know when you're going to be wrong? Those two are forever linked, and it's the only way you can approach investing as a business is if you can know when you're wrong. So you finally figured out why you're going to buy stocks, you found out what stocks you want to buy, you finally bought the stock, and now you have a beautiful profit. Well, if you don't take that profit, it's not yours. Unrealized gains don't count. So you have to know, when am I going to sell the stock? This is much more difficult than knowing when to buy. Ironic, people will figure it's just as difficult. It's actually much more difficult because selling the stock comes down a lot more to what your goal is and what your strategy is than when you're buying. Because stocks moves can go on for far more extended advances than we expect. They can also have much shorter bursts of momentum that kind of reverse and fail. So if you're someone looking for short-term bursts of momentum, you want to be selling into strength very quickly. And so you need to identify that. And if the stock just keeps going and going and going, that's part of the business. I remember for years I was a market maker, and we would joke around with the guys. We would have these big positions because we're short-term trading and all of this stuff, like really concentrated positions, sell for small profits, and we would, every once in a while, there's a stock that would just keep going and going. I remember back in the day it was BlackBerry that just kept going and going. There's always kind of something, right? The marijuana stocks had this extended move. There's always going to be something that you kind of had in your hands, and it just went far, far past what you ever thought expected. Now, and we used to joke that, hey, if we just would have held that one stock, would have been retired. And it's true in theory, but we're running a business, right? So you don't always know which stock doesn't have the extended advance. And if your job is like mine was at the time, market making, my job is to roll over that capital as often as I can, keep it going, and kind of pile up short-term profits, hopefully to bigger gains at the end of the day. So that is, the selling technique has to relate directly to what you're trying to capture. If you're looking for undervalued securities, your selling may be a point where, okay, I feel it's reached my full valuation based on this criteria. If you're a growth investor, it may be, okay, great, I feel that we have this climax top where all of the growth is being priced in, and you have this movement that's typical of the end of a move in a growth stock. Whatever your selling technique is, it's going to be directly linked to the logic of your system, the underlying strategy. That's why I said that's the first step of whatever you do, because that really will set the stage for how these other tools will interact with each other. And when you have the logic of your system and something's not working right, you can go back and say, okay, why didn't that work right? And am I still acting within the original logic I was trying to capture? And this is where you can kind of stop the frustration. You can stop the what ifs. What if I would have done that? What if I would have done that? The market is a series of constantly changing probabilities and scenarios. You can never capture everything perfect. So knowing that you're operating within a fixed logic will help you to set your selling rules into strength, ideally, or using a trailing stop that works effectively for your strategy. And it'll stop the self-doubt, the what if. And instead of complaining after a really good trade, you'll have the gratitude to say like, wow, I implemented my system, I caught this great move. Good job, let's celebrate, instead of, oh, I should have done better, and this kind of self-defeating attitude a lot of traders will get when they expect to always be perfect on everything. Next up is probably, I would say, what professional investors begin with, and it's probably the afterthought for people who are new to the business, but this is really kind of risk management position sizing. This is the absolute foundation that every strategy, if you're approaching this as a business, will rely on. I don't care what entry technique you have. I don't care how accurate you are. If you get position sizing or risk management wrong, you will blow up at some point in the future. It's almost a mathematical certainty, especially the more leverage you trade or the more concentrated you trade. If you don't have a good position sizing and risk management strategy in place, you'll blow up at some point. And I've seen incredibly successful investors blow up because they fail to adhere to the actual rules they put in place. That's a whole other discussion. But whenever you're buying a stock, how much of the stock are you buying? And how do you manage the risk that you're taking on for that stock and for your portfolio as a whole? You need to be able to answer those at all times. What are concentration levels that are acceptable to you in an individual stock? What are concentration levels that are acceptable to you in a specific theme or industry? How do you react to unforeseen events, downside events for your portfolio or for an individual stock? You need a really rock solid position sizing and risk management process. In fact, for my personal strategy, this is the only part of my personal strategy that is 100% black and white. I do not deviate from. I don't like a totally black box system. I enjoy the process of trying to find the next great stock and finding out where am I going to buy this, how I'm going to build into this stock over time, when am I going to sell it. But what I absolutely want to avoid is going off that cliff, making that one dire mistake that undoes a career worth of effort if you get it really bad. So for me, my position sizing and my risk management are such core principles of my approach that is black and white for me. And I know some people will have a little more play into how they decide their risk management, but whatever it is, you need a very serious plan about how you approach this, because that is the number one reason that people will ultimately fail if they don't quit, is that the risk management goes out the window. They don't adhere to their stop loss. They take on too much size, too much risk. They don't realize what they're doing, and then they blow up. So a really critical element, you need to really have this locked down. The last element that's required, and all of this is available on my website. There's a link below the video. You can go in, you can click on the link, and you'll have a list of all of this, even with a bit of a checklist, so you can kind of run through your own strategy. Really recommend you check that out. Very helpful to kind of have something in paper form to just kind of, or digital paper form to actually work through and really think through. I mean, it's absolutely vital. Most people who kind of hear things just, yes, they find it interesting, unless you actually put that effort into filling it out and putting your thoughts to paper, you won't internalize what you learn. So if you want to, run through that practice, check out the link below and you can access that on the website. The last thing I want to talk about here that's, so incredibly important, but no one will ever really speak to or even think of. It's almost an afterthought. It's why people come to investing in the first place, but they kind of forget about it when they go through the whole process of investing. Is that what are your life goals that you want to accomplish from your investing? Yeah, we're all here to make money, but you know what? Like any business, and this is a business, we're talking about approaching investing like a business, not just buy and hold and all the rest. That's a whole different thing. This is someone who wants to put effort into kind of really trying to elevate their returns while controlling their risks. This is for certain people who want to approach this like a business person. Now, we all kind of come to this initially I was, a teenager when I got into investing. It's like, let's make as much money as possible and become the next Paul Tudor Jones. When you go through the weeds of a bad market or series of drawdown or all of these different losses that are going to hit you, to hit everybody, it's easy to forget why you got into this in the first place. Or even if you do, if your goals are not audacious enough, if your goals are not big enough, you're going to quit because you say, oh, all this frustration for what? Because I wanted an extra 2% return on my portfolio. If you can kind of sit down and say, wow, if I can hit my goals, if I can grow my account by X amount, or if I can find that great growth stock and I can really kind of significantly move my account, or if I can create this regular stream of profits from trading, that I can do this for a living and I would love to have my own business. If you can make the goal something that's so incredible, that really speaks to you. It could be, I want to, I have my pension, I'm an older person, I'm good, but I have this pool of money where if I can really grow this, I can pay for all of my grandkids to go to university, and that would just bring me so much joy. If you can put down your actual goal about why you're doing this, that is going to be probably the main thing that will actually get you to your success. There's two reasons people quit trading. One, they don't have good risk management, they blow up, or two, they get tired, they get frustrated, they get fed up with the process of the losses, or the churn, or not being a perfect market, and they just give up and they quit. You won't quit something if you see what it could possibly be, what you're really aiming to accomplish. So that's probably one of the least respected points of this, let's say, strategy development process of trying to build out these different things, or the less thought of. Probably, though, one of the most important. At the end of the day, so many of the tools that many successful investors use are similar. A lot of the same logic goes back 100 years. There's books like Reminiscence of a Stock Operator by Jesse Livermore. There's stuff he spoke about in that book that I actually took and would help me in my market making, that he was talking about how he would buy and sell stocks. It was 100 years old, that knowledge. It was still applicable today. Markets don't change at their core. But where most people fail is not having the kind of persistence, consistency, getting through the hard times, because this is really a business. I mean, most businesses are not easy to launch, or everyone would run their own business, right? The beautiful thing about this is you can achieve a lot of success, and you can do it without all the infrastructure and the employees. It's something that's a little more in your hands, and you can kind of control what intensity you want to go at this with. You want to take on a lot of risk, a little bit of risk. You have extremely audacious return goals, a little bit slower, but over time will compound and be something amazing. It's in your hands, but having those goals are what's going to get you to that finish line. So I hope you enjoyed this video. I think it would help so many people to just go through this process, because so many people, again, don't know what they don't know. And until you put your pen to paper, until you actually try and fill this out, you won't see what gaps are missing in your process. If you enjoyed it, you can check out, you can get, again, with the link below, you can get a sheet describing all these different points as a little bit of a summary that you can fill out and work with. You can follow me on Twitter at trader_mcaruso. You can also visit me on my site at carusoinsights.com. I hope you enjoyed the video. If you do, like, subscribe. We'll get some more videos out in the future. Until then, good luck trading.